Hey everyone, welcome to our very first fifth cast, and with me here today is Rusmin. Hey Rusmin.
Hi Adam, hi everyone.
Now, before we kick things off, the idea of fifth cast is that we want to go more in-depth and interactive with the articles that we have on the fifth person. So we'll be interviewing investors and experts just like Rusmin to discuss and talk about important topics that matter to investors like you. So you can receive more insights, analysis, and overall more value from all of us here at the fifth person. So with that, let's get the ball rolling. And our very first subject of interest we're going to talk about today is why invest in REITs, or specifically Singapore REITs as well. All right. So Rusmin, why should investors have a very good look at REITs right now, or in general, you know?
Well, I think the first thing that you need to consider is that the kind of REITs that assets own majority of that are actually concentrated in Singapore, and we all know that Singapore is a very politically stable country, and Lee Kuan Yew has built a country that is a place that is everybody will love to stay, and it's so clean, and it's like free of corruption, stuff like that.
So basically, the structures and the infrastructure, the systems that we have here allow investors to really, put the money in a very safe place, which is our country.
Correct. Yeah. So that's why you get to see people like Jim Rogers and then one of the Facebook co-founder actually migrated over to Singapore, and people like me as well.
yeah, you're not a Singaporean.
So basically, Singapore is a politically stable country, and at the same time, it has a scarce of land.
Yes.
Correct. So that itself, the value of the property will continue to appreciate so long as the country continues to do well in the future.
So if I can say, we all know that property in Singapore is really, really expensive, and prices have been going up over the many decades. So like REITs is a great way to get invested in the local property market without having to like invest a whole lot in buying like a whole physical property all by yourself, which can be really, really expensive, right?
Yeah. Right. So in fact, when you buy a physical property itself, you still have to pay property tax. Right? But for REIT itself, you don't really have to, because they are exempted from so long as the REITs continue to pay out more than 90% of their distributable income, they are exempted from tax. So basically, you are getting more dividends, when you invest in REITs as compared you investing in the physical properties.
Okay, so one of the very first advantages of investing in REITs is that it's tax-free.
Tax-free.
The distributions you receive every 3 months is tax-free.
Correct.
And the REITs themselves have special tax exemptions, which allow them to basically give out a lot of their profits to unit holders in the form of distributions, right?
Yes. Yeah.
All right. So the first advantage is basically REITs are very low tax or even tax-free. Yep. Okay. So why else should we invest in REITs?
Well, if you compare again with investing in physical property itself, sometimes it requires a large quantum, and that's fine, because you can actually borrow money. But the problem or the issue is that when you invest in physical properties, you can invest in one single location, and maybe probably with one tenant, unless you are very well to do. You can buy multiple properties by yourself. Okay, but in most cases, most people would not have the chance to own so many properties. So REITs actually is a platform to allow them to invest in multiple assets. In fact, it could ranges from retail like malls, offices, healthcare, basically the hospitals, to all the way to the residentials. So you have multiple assets, and at the same time you have many tenants. So if you take a look at, for example, Capital Mall Asia, which they have close to 3,000 tenants as of 2014. Okay, and they have 16 malls which are well diversified across Singapore Island. So you don't have a concentration risk as per se, as compared to owning just a single property by yourself.
So what you're saying is that when the moment you become a shareholder of Capital Malls, all these 3,000 tenants are actually paying you a distribution.
Correct.
Right? And you don't even have to manage them.
Yes.
And you don't just invest in one single property, because Capital Mall has malls all over Singapore, and you basically have a stake in each one of them. When you become a shareholder.
Correct. Yeah, a small stake, a small pie.
I mean, you can always buy more.
Okay.
And then you become a major shareholder, and then buy up the whole thing all by yourself.
But the idea here is actually it's very well diversified investment
compared to just if you bought one property, physical property all by yourself, and you get a tenant from hell who basically trashes out your whole place, and that could get really, messy, right?
Yes, yeah.
So this one, the REITs basically take care of everything for you.
And another distinctive reason why REITs are a good investment that you should actually consider is that it is a safely regulated industry.
Okay.
And when I say safely regulated industry, it means that the REITs actually regulated by Monetary Authority of Singapore, which is the MAS, and it says that the REITs cannot borrow up to 35% of the borrowings as compared to their total assets in taking out loans. Okay, so there has a restriction unless they are rated by top three credit rating agencies like Moody, S&P, and Fitch.
The regulations have recently been updated.
Updated, correct.
So what are the new? What's the new gearing ratio?
The new gearing ratio is actually now been changed to about 45%.
45%.
Okay, but that only will start from 2016 onward.
In January 2016.
Yes, correct.
So right now it's still up to 35% gearing.
Correct.
And 60%
if they are rated.
if they're rated by one of the top three credit rating agencies like S&P and Moody's and stuff like that.
Yeah.
But 2016 onwards is going to be 45%.
Yeah.
Which is still a good number for us.
A good number for us. Yeah.
It's still pretty safe. So just now we were talking about having REITs being a way to be well diversified in the way you invest in properties. That's the second advantage. Now the third advantage is basically it's a very safe and regulated environment because the MAS really has a handle on this. Yeah, to protect all the investors, all the retail investors like you and me.
So you don't really have to worry that a REIT will over leverage themselves.
Yeah.
But of course, by saying that, we don't generalize every REITs are safe.
Yes.
You still have to do the underlying analysis for each individual REIT itself. Right. And another regulation that actually imposed by the authority is that the REIT cannot spend more than 10% of their total assets in development. But this has been changed to about 25%.
25%.
So in other words, REIT cannot take on more risky investment in development that is not cash generating. So by restricting that, REITs are more safe.
Yeah.
In that sense.
So all these regulations protect you because in the case of like a regular stock, you buy a business, there's really no limit to how much money the business wants to borrow.
Yeah.
And there's really no limit how much they want to put, how much of their cash into a new project that could not take off.
Yes.
But when it comes to REITs, there are limits to all of this because the MAS really wants to protect the investor. They just want the REITs to be a very safe and stable form of investment. That's what all these regulations are for.
There's the idea of attracting income investors. Like me.
Yeah. Income investors like things slow, steady, boring.
Yeah. Correct.
Just like Rusmin.
And many other people as well.
Oh yeah. So a lot of boring people out there. So the point about gearing ratio is that because we think gearing is a very crucial aspect of analyzing any company, a REIT or a business, because the amount of debt a company has is important. So that's why the REIT data table that we have on the fifth person, if you go take a look at our navigation bar, there's a link there that goes to S-REIT data. There's a table there that lists all the REITs that there are in Singapore, and we list all the crucial factors that we look at. And one of them is basically gearing ratio and how much debt REIT has at the particular moment, which is an important point you need to consider when you research a REIT. Okay, so far we have three advantages so far.
Three main advantages.
Main advantages. Any other benefits to investing in REITs?
Well, I think for beginners, especially students or someone who just started out in their career, and in investing in a physical property, again, it could be it may need a large sum of money for you to invest to own a physical property. But if you are someone who just started out, REITs actually gives you that access. In other words, if you have let's say $3,000-$4,000 and you can start actually investing in REITs itself, and then you start to collect dividend yield. And the yield itself can be as high as 6% a year. So in 2014, on average, all the REITs that is paying to the investor in 2014 was about 6% as compared to bank interest rate, which is about less than 1%, fixed D, which is about 1%, or sometimes even 2%. Right. So REITs generally offer a better yield as compared to other instruments.
So the first advantage there is basically you can invest in property, in this case REITs, with very low investment amounts. You can
Yes.
start as a student, $3,000, $2,000, or even less,
Yep.
and you can start investing,
Start
start
investing.
building a property portfolio. which is a great thing to have.
Correct.
But I think the most attractive thing about REITs is basically the very high, consistent and stable yield that they provide to all investors, which is why so many income investors invest in REITs, because they like seeing those checks coming into their mailbox every 3
that's
months.
lovely.
Yeah, and like you were saying, it's 6% yield on average for all the REITs in Singapore. That's on average. So
That's on average.
That means some REITs are giving you even higher.
7%,
8%.
Some is even lesser, like about 5%. So on average, it's about 6%.
6%.
Right,
Which is if this is the first time you're hearing it, you probably think that wow, 6% every single year is a great way to make money, to
Yes.
grow your money, because a lot of people are so used to putting their money in a fixed deposit, which gives them 1% or less. Or they put the money in a bond, which gives them like 2%, 3%, 4%, but there's no growth. But with a REIT, you get the advantage of some growth, okay,
Yep.
and at the same time you get very simple, stable investment yield out of it, 6%.
And you receive that 6% actually in 4 tranches.
Yeah.
So every 3 months, you receive your dividends.
Yep.
So if you invested back, many years ago, you probably still receiving checks.
Yep.
Right. So receiving checks regularly, it gives me different feeling as compared to just receiving a bill, a phone bill.
Everyone receives bills in the
Yeah.
in the mail, but
So now at least you get a check that is income, not expense.
so you look forward to opening your letterbox.
Correct.
Completely different.
Yeah, but now I think it's hard for new investors who are coming in, because these dividends are usually auto credited to your bank account.
Yeah.
Yeah,
So you don't get the visceral experience of opening a letter and then seeing a check of like.
The feeling is
It's different, totally different, right?
It's very different.
Yeah. So I still receive checks from
Yeah.
some of my
Same for me.
investments. Okay. So
Yeah.
but we're digressing. So basically, it's REITs give you very high, stable yield for the amount you invest. So if you're looking for yield, you're looking for income, stable passive income, take a look at REITs. It's one of the best advantages of why you should invest in REITs. So again, if you're interested in taking a look at REITs, and you want to know more about the whole instrument altogether, take a look at our S-REIT data table, because over there we have all the important metrics that you should look at when you want to invest in a REIT. So in fact, we list the entire table based on the distribution yield that you're getting from your REIT. So at the highest you get some industrial REITs, I guess, right?
Yes,
They
correct.
are giving you maybe 7-8% a
Yeah.
year, but they're a bit more volatile. Okay, but you get some very stable REITs like Capital Mall or Parkway Life.
Or First REITs,
Or First REIT,
right.
which are more stable, but they give you very stable 5%, which is very good as well.
Yeah.
For some people, they will be in love with that. All right. So with that, this has been a fifth cast production, right? And we've been just wanted to share with you why you should take a look at REITs if you want to look for income, you look for passive income, for dividends, and why they are a very viable investment choice for you if you want, basically passive income. All right. So thank you very much, Rusmin.
Thank you.
All right. Thank you for listening to us on Fifth Cast. We're going to have more of this down the line in the future. We're going to interview more people. We're going to interview more experts and investors, and just have a look out for our Fifth Cast videos and interviews. And we hope you've enjoyed it. So thank you so much.